Alrighty, hello everybody and welcome to the live stream. Welcome to, of course, the Monday Open and CPI inflation week. As always, everyone, we seem to be seeing a lot of metals action, and that is the same today. Another 1% up for silver. And of course, we've got something in the air here for the Russell 2000 that we'll go through a little bit later on. So small caps broke out last week. We saw ARC, we saw the Russell 2000, we saw quite a lot of flows going on there. 6,000 is the major level to be looking at. And I thought I would go through a couple of charts here, a bit of macro before we get started. Some things that we shared and talked about in the weekend video. So let's give a shout out, though, to the people that were here earliest. And earliest today, we have Brian, Jits, Kevin, Big John, Andrew. Then we've got 2023 Gainer. It's been gaining since 2023. Burned. Stock Crypto Pappy, Michael, Professor G, Mike, and many, many others. Thank you, guys. Stock Crypto Pappy says here, inflation should come in low since it seems demand is lowering. Well, we'll see about that. And Thomas D says silver is the bomb. Always good to see you here, Thomas. You've been here for a long time. And Al joining us on the X platform. We are dual streaming today. All right. Everyone can hear me clearly. That's good. And what I wanted to start talking about was the 6,000 call wall, because basically we are currently on probably the biggest two strikes that we've seen in a while, and that is when you look at all expirations of the S&P 500, and this basically means that it's all like kind of the forward options levels that we're watching. The big thing here is that we are seeing a 6,000 call wall. Yeah, I know that, John. The sound is going to be okay this week. It's not going to be exceptional like usual. But that's just because of the soundboard. So 6,000, and you can see here the call wall. We'll be back next week with that one. The call wall here, big level. 6,000 plus broken this week. 6,100 becomes the next level. We're in positive gamma at that stage. And this is basically the last level that the bears even could pressure it before, really getting to that zone. A couple of other interesting charts I thought I'd share with you guys here. The first one is that the average holding period for stocks is obviously incredibly low now. And this is just a symptom of cheaper transaction costs. And obviously also, I think, the sign of the times, which is that people are willing to potentially just hold positions for a couple of months, get rid of them. And this is not new. This has obviously been going on now for a couple of decades, but we're now down to less than a year for the average investor holding period. And I thought this was a really interesting chart here. I just posted over on X as well. Thanks to Kobe SE Letter and Goldman Sachs, which basically says that China has been purchasing a little bit of sneaky gold. And it looks like they've been doing this for a while. So I liken this level over here. I went through this in our macro show, which is our private weekly kind of show. If you are interested, links in the description down below for a 7-day trial. But I likened this to the beginning, obviously, of the BRICS versus SWIFT system. And this is 2016. So it's been going on for a long time. We're about 10 years into this BRICS versus SWIFT system, at least how I see it. You can see here the mass purchase of gold back in 16. And then, of course, where we are right now, which is, 2022 and 2024 and 2025, which seems to be a bit of shadow buying. Now, Goldman Sachs is estimating that China is purchasing on the London OTC market further gold positions, and they've actually stacked incredible positions over the last 2 to 3 years. And this further strengthens what we've already thought, which is it's not, well, look, we know it's not just China, it's Russia, it's India, it's so many different central banks, of course, America as well, and others that have been getting into the gold game. And it's really just it's a complete and utter geopolitical risk play. And also on top of this, we're seeing a huge amount of transactions coming through now with silver, which has obviously been the interesting component, because do we see silver now as the big gainer after gold? We shared a lot of charts on this. You guys have seen them all, which is really charts that show kind of silver jumping through. And that is that silver plays catch up to gold at some point. Now, silver at the moment is 36.27. I've discussed with you guys a few times that the potential here is technically up to 42.43. There's not much stopping it before that. Obviously, yes, it's technically becoming more overbought by the day. But as you know, and I'm sure we're all aware, when things go into momentum trends, especially at the moment, they tend to be fairly resilient. And that means that you can't just bet on pullbacks and then rallies and stuff. It can happen. It's just not something that you can say that's going to definitely happen or anything like that. Let's have a look at the silver gold ratio. How you bring it up is just go silver/gold in your TradingView platform. And all you need to do then is wait a second, and it will show you here what we've suspected for a while. And I think this was great work by you guys. And why I say that is because what we've been doing together here is we've been building out a storyline of a basing structure for silver. And we've long suspected anywhere between even where it is right now and around this 0.01 area, so 0.01 and 0.011, that silver was a little bit undervalued to gold. And that's just based on historics. And if you actually load this up, it's what we call a long short. And you can see here that it's really, really low. And the last time we saw this was 2020. And then before that, the last time we saw it was actually all the way over here back in the 1990s. It's been a long time. Even during the global financial crisis where silver bounced off, we actually had a better ratio. So really, it's been cheap for a while. And that doesn't mean it hasn't been holding its own ground. It's basically neutral on the 22 level. So it's been doing okay in terms of pure percentages. But what happens if we break through a 0.011? Can anyone see here in the chat, what is your logical next level that you'd be looking at least from a ratio? Because remember, you should do your silver targets, maybe 42, 43, at least initially. What should you be doing though as a ratio? And this is something that you want to do on a lot of different pairs, including a lot of cryptos. We've got Lisa coming in. Good morning. Good morning, Lisa. Bloodbath McGrath says platinum to 10K, getting pretty bullish on platinum. A lot of those other metals have started going. Vemi, good to have you here. Kevin says, I want silver to backtest 35, 35.50. Probably quite a few people do want that. And Space Nectar, that's an interesting name, said, I hit 540% with options trade on silver last. That's a bit crazy. Last week, looking for continuation. Well, what I would say is if you're making that kind of percentage, think about banking, think about getting your risk in as well. Because obviously it's great to get these big gains, but you don't want to be giving them up, man. So Space Nectar, you're in the nectar right now. Make sure you hold on to it. Thomas says to the moon. Toad says 0.012, 61.8 fib according to Al. So that would be the backward 61.8 fib. I'll show you what that looks like so you can see. So it's like this kind of level in here. And yeah, I mean, that's fair. That's certainly a fair level. To me, it's probably 0.013. So Chaz says here 0.012 to 0.014. Yeah, I think that is fair. Also, welcome to the 1,200 people joining us. Thanks, guys, for trusting us and coming in here for the Monday session to bring you everything you need to know. Another thing I guess I'll mention here is might be a little bit blurry, but I just quickly go through the news this week before we go back to that silver ratio. So the main thing this week is, yes, we have bond auctions. So you can see here the US 3-year on Tuesday, Wednesday, 10-year. I don't really usually pay that much attention to these, but this is now a thing. So we've been talking about bonds starting to show those cracks. Jamie Dimon obviously is, widely going on about it so that he can probably get deregulation. But either way, this will be a bigger thing later on this year. And the main one this week is, of course, CPI on Wednesday. Then we've got PPI on Thursday, and then we've got Friday, which is the UOM sentiment report. So, do I really think any of these are going to move the markets too much? They may be used as excuses, but ultimately, unless inflation comes in really weird, they're probably just going to be, just flashing the kind of, pan stuff. You always got to ask yourself with news, have you forgotten it 2 weeks later? And if the answer is yes, then it probably didn't matter that much. Think about the tariff news. Think about Liberation Day. It's unlikely one of you have forgotten that day, and that's because it really did matter. It was a huge session. It was a huge day. There was a huge policy shift. So these are the things that you got to keep in your mind. That is one of the best pieces of, I guess, I don't really offer, advice as much, but best pieces of education that you can do, which is to know that in general, it is best to say if you're not going to remember the news in a month, in 2 months, in 3 months, it probably doesn't matter that much. Thomas D coming in with a nice, beautiful support sticker, always very giving, says $1.49 support stickers. Thank you very much. Uranium is also looking strong this AM, maybe oil. Well, funnily enough, I do have a macro for that. So yeah, 0.013 would be a target that I'm originally looking at. And then, of course, if that so aligned with 42.43, then it would make a lot of sense. And ultimately, if you're a really big silver bull, of course, you can go 0.015. And if you're really crazy, of course, you could be looking at 0.012. So 0.02, that's going to be a pretty big deal or zone. 1 sec, I'll just grab this chart for you. Here we go. I do have it ready somewhere here. Here it is. Okay, so I did actually have this. This is from our macro show again, and it's another one that I think is interesting. A bit of a mixture here. Couple of things. Do anyone notice what's going on in the top chart? Let's do a bit of education here. What do you guys think? What happened on the top chart, if you can see it, that is interesting and a little bit terrifying at the same time? Who led price? Now, why I'm mentioning this is because somebody else down here said it looks like uranium is super strong this AM. Yes, uranium has been, or nuclear power has been, the favorite pick of retail. So we've got the two number one kind of retail picks right now is nuclear power. I have spoken about uranium several times. I've been sitting on it for a long time. This thing is, it's been sitting for a bit, went for a bit of a rally, dumped a lot, and then rallied back up. Now it's, of course, going to an new high, not all-time high by any stance. But yes, it looks like nuclear power and quantum are the number one and the number two. So everyone thinks quantum's here. What do you think, chat? Is quantum ready? Is this speculation? Is this mad speculation because quantum is super not there yet? And it's like 3D printing initially, or even when those marijuana stocks were going, and then everyone realized there was actually not much moat in those businesses. That's the type of thing that usually does happen. Toe says here, retail overbuying IWM. Yeah, retail was leading the Russell. So effectively, the breakout on the Russell happened on retail first and before price. And notoriously, I'm not a big fan of that. You can actually see here, funnily enough, that look at this initial buy. It was interesting because this initial buy was actually super dumped by retail. And then they started buying back up and actually speeding up into it as they saw it as more of an aggressive play. So it's interesting to see how Wall Street or the general market price action is compared to the retail flow. But the key to this chart down here is no one in retail is loving semis. And that's because people were burnt back here. And semis have been doing very, very nicely. So I'm surprised that it's so bad there for retail on that code. Let's have a quick look here at uranium while we're talking about it. We'll get to the S&P 500 in just a moment. But you can see here, uranium dabbling with those highs. Super nice move off the lows and really a pretty good weekly break. You've got that kind of more indecision candle, and then you've got a weekly that's closed up there in the highs, and it looks like it's reaching for the stars, and it's up here 3% in the morning. A lot of the reason for that is, I think, if you look at something like ARK versus, if you look at ARK-K versus SPY as well, you're going to see a huge improvement on ARK-K recently. It seems to be risk on across the board, guys. So you've got a change of trend here. You've got a consolidation. This is ARK versus the S&P 500. So the consolidation here on the right-hand side, and a big breakout last week, again, up another 1% after hours. So this is the kind of thing that you don't often see, which is, these big breakouts in the hypers. The thing with the hypers, they can run for a little while. They are notoriously trappy. So I'm hoping this time it doesn't trap too many people out there. Who doesn't love good semiconductors? Well, a lot of people, according to that last chart. And yeah, it seems to be here. Quantum is here because of AI acceleration boost productivity. Okay, YouTuber believes it here. Gold Rush with kind of a different opinion says quantum is far away. It's making progress, but definitely used for AI hype currently. Yeah, absolutely. Seems to be a lot of differing opinions there. Tom says, hey, you have some unreal mail. Oh, I love mail. Oh, down the bottom. 63K. That's a spam account that's there, but you like that? It probably gives people with OCD crazy. I know it's not the mains. Yeah, there's a lot. You probably want to clear that, wouldn't you? So some differing opinions there, obviously, on quantum. So it's one of those things that I think, if I had to guess, I'd say it's probably still early for that. But ARK versus SPY, you can clearly see it here. Uranium, we saw before, the strength there. Very, very good. And those are the kind of plays that most people are looking at, along with now it looks like hypergrowth. Let's have a look at the US 500, then let's look at the Russell. First up, US 500, it's all about 6,000. This level is super key. Basically, these levels are not updated, so from ages ago, they just keep updating it through. So you would have seen in the weekend video, I have the new daily options for today, but yeah, they haven't reset in this chart because I refreshed it before. But you can see here the US 500 is kind of teetering on that 6,000 level. Now, I did mention this to my group, but the main thing here, and I'll say it to you, is getting the new high. Now, if the new high happens and we close, I'd say we're going to 6,100. It's mostly a gamma reason. So we usually would reach into that 6,100 high. It's a mixture of gamma. It's a mixture of, a huge amount of options just struck at that zone, and the market will want to try to push towards that next level. At least that's the general consensus if you're looking at statistics long term. 6,000 though is critical. So people are going to probably ask today, and I'll ask you guys this. Remember, the stock market is not what's actually going on right now. Do you guys think, unfortunately, there's a lot of these riots going on in California. Should you be paying attention to those if you're a stock market trader, as in like freaking out on them? Or should you just say the flows are the flows and I'm going to pay attention to that? Because remember, we do get distracted often from all these things that are going on around the world. So, obviously that's in the US, but as you can see here, the market is still up here in the current market. So it could be used as an excuse, but generally you've got to pay attention to the flows and the movements. Flow only, ignore riots and look at flows. Yeah, you guys are smart. Absolutely. Yeah, that's exactly what you got to do. And you've always got to do it this way. I like to think of it as we are resilient people. Okay. I know you're resilient. I know each and every one of you guys are resilient. Why do you think you're resilient? Because I would guess there's almost no one that started less than a month ago. Is there anyone that started less than a month ago in trading in this chat right now? You put your hand up if you are. Because as we know, I'm going to say this one more time because I'm always going through this. The general flow of the trader is you come in. It's like cooking, yeah? You come in, you think, ooh, Jamie Oliver, I'm going to cook your scrambled egg, something, whatever. And it's not that great, but it's okay. And you start getting a little bit excited about cooking, and then you go down the rabbit hole and you end up with some random chef that you've never heard of that's got like some pro kitchen at his house that's making stuff. And you're like, yeah, this guy's the boss. And then obviously you've come full circle. But in trading, it's the same kind of thing. You start off with your blue chips. So you start off with your blue chips, then you move into your CFDs or your futures kind of action, and your small caps. Generally go mid caps first, and you go your small caps. And I always say it's the same thing because you all think, everyone here, we all think we're pretty special. Then you get into your CFDs and your futures. Then you get into your options. So you generally don't get into your options first off. Some people will skip futures and go straight to options, but generally there's still a bit of mid cap, small cap action. Then you go your options, and then you kind of come around here you go full circle. Somebody might stop and go a little crazy and go into, let's say, somewhere in here, maybe some soft commodities. That is a mistake. If you do that, you are insane. And then you end up with the blue chips, and then you usually attach some options, and that's kind of how it ends. So most of you are probably somewhere, I would guess, in the small cap CFD option blue chip stage. I doubt you're in the blue chip start stage. And that's why, I know you're resilient, because you've gone through a couple of things. You've seen stuff more so than others. I'm not in those ASX penny stocks, I swear. Okay. The circle of trading life, pretty much. That's absolutely right. If you take the wrong turn, you end up trading biopharmaceutical stocks with no liquidity. Oh, yeah. Really small biopharmas, but that's in the small caps. So you end up in under 200 million companies, small cap. That's diabolical. But actually, if you take the really bad turn, you end up in softs. Anyone that's traded softs will know that is the worst place you could be. Tom, do you mind talking about quantum computing stocks? Yeah, I am going to do special on that. Look, with the quantum computing stocks, if you've got a couple of codes you want me to have a look at, we can do it. I do want to start doing a few specials for this Monday session, though, especially when it's a little bit quieter, which I expect a little bit of more quietness maybe in the next couple of months. I'd like to cover them. And I am presenting a list. If you've got a few, though, let me know. I'll check them out. Hey, Tom, question. Since Besson is planning on buying treasuries, is that a form of QE? Well, I think there's already been a lot of QE going on. People forget there's backdoor ways of QE. Liquidity. Look, all we're interested in is liquidity. And liquidity is already being provided to the market for the last 2 years from central banks around the world, including the Fed. And the Fed has been already providing that. Now, it's not on that statistical chart that I show every day, but I can tell you there's backdoor methods they've been using. Now, the one you're thinking about is buying, of course, stocks, treasuries, etc. Yes, I guess it would be, but I'd have to look at the sizing. So I'll reassess that. Anyway, with these charts, 6,000 plus, especially above 60.17 close, I think it's going to 61.25. I'm pretty sure you guys will agree. If that does move, at least that's statistics. And if a bear's going to come in, they've got to pounce really quickly. Let's move US 2000, probably the most interesting chart of the major indices. And you can see here, it broke out. Now, there's no way that most people don't see this. You guys follow, I'm sure, others. Is a lot of people talking about this? Yes or no? What do you guys think? QE in disguise? Yes, correct. Do you think there'll be a major crash like the one that happened in April, since the Fed is doing EQ indirectly and inflation is coming down? I think there will be a major crash. I'm not sure if it's going to come like in 2-3 weeks and in a few months or anything. I do talk about in my advanced course. There is a replicable system that's been going on for realistically thousands of years, but specifically in our style financial system for hundreds of years. And it's just it's actually driven by almost the people and then politics. And it doesn't matter whether it's Republican or Democrat or anybody really. It's just you have to look at the way that we tend to screw things up. And we have been doing that. And obviously you'll hear Bear talk about these things. I talk a lot about home builders. There are reasons for that. That's one of my signs. There are about 7 pillars that I use. And you have to have replication. And luckily there is a replicable system in that. But when does it occur? You have to be very careful about being a giant bear. Remember, if you're a bear for like 20%, 15%, 10%, there are some stats on your side. Really, you should be bear for about 5 to 8% generally in terms of pullbacks. And it's rarer to get a 10. We knew we'd get a 10 this year, at least statistically. We didn't expect a 20, a 19 like we got. Of course, we didn't think that. I thought 10 to 12 initially. And then eventually we're going to get a 55 plus. And that's the one that you're terrified of course, but the market often has gone up quite a lot before that. So 55 is all relative or more. But yes, I do think one's coming in the next couple of years. And I said that back in 22. I said 20, 26, 27 look really, really terrified. I'm sure I'm wrong, but I'm convinced deflation is the bigger issue. Ultimately, deflation. So let's talk tariffs here for a second. My personal opinion is if the tariffs stick, they are going to cause deflation. They are going to cause people who have gone out and sugar rush bought, it generally ends like this. And that is a lack of demand. People kind of over leverage themselves, and they end up not having the money to deal with the money. Everything's going on. It is effectively a 10% tax plus, of course, the other stuff that's going on. And then what that ends up with is generally a recession. And I don't think it's ever not been like that with tariffs that have stuck for a long time, these higher tariffs. This is across the board global tariff from the world's number one superpower. So ultimately, I do think it ends that way if it sticks, if it keeps sticking. You might say, well, the Fed comes out and prints, it's all going to be great. No, I think all this stuff is sugar rush. I think there is a bigger problem there. Anyway, we're talking Russell here for a second. So let's have a look at the Russell. And you can see here that we have this inverse head and shoulders that a few of you said most people do see. Again, that's just statistics on the stuff. Bad sound, is it possible to adjust the mic? Unfortunately, not today. I have a soundboard, but it's it malfunctioned. Let's just say that. So it'll be fixed. I'll get it back next week. And you will hear it. Yeah, it'll be loud and clear next week. Yeah, a few people say yes, the Russell's been found quite a few times here. Deep says, yeah, that's all right. Inverse head and shoulders on the Russell, correct? Yes, so the breakout is real. And generally, there are a couple of levels people will look at. They may look around this 2160 as a resistance, but I think this is not a good buy zone. This is kind of the area here that we want to be looking at. So obviously, this is where market turns bullish, and then market obviously goes towards this resistance supply area, which is around 2300-ish. So 2280, 2300 for the Russell is the logical choice. If you're taking the inverse head and shoulders, a lot of people are going to look for more. I'm not sure if that's the right move, at least initially. But yeah, this is the extrapolation. And whenever I see these, I always like to see whether they proof. And of course, that is above the previous high. So I would be looking around here. Currently, this is the best market sector of the day. And that's pretty much because RK and small caps broke out last week. Tara says, fine. Yeah, I know. It's just not that clarity that people look for. I get it. Is entering silver now crazy? Depends on your time horizon, but it's not really ideal if you're looking for replication. I think, look, the thing is timing is everything. And sometimes you want to chase stuff when you see it. The problem is you see it. And when you see it, it becomes most dangerous because you're not convinced, you don't have that clarity of mind. No problem. It's fine. Trading is a massively long game. You've got abundance mindset. If you're ever chasing and you feel like it's a chase, you shouldn't do it. It's that simple. Someone in the chat tell this person, help this person to understand that, because I can say it, but you may not believe it. If 10 people say it, you might say, wow, that's actually pretty correct. Chasing is never really the answer. I tell you what, though, Bitcoin, what do you guys think about this? This is pretty big. I think we're going to get a new all-time high. It looks really nice. Eugene says, 2 months for me. I've got Dunning-Kruger. Hey, at least you know, man. Dunning, if you actually say that, then you are on the right path in itself. When I first started trading and investing, not so much the first time, but when I first saw, I remember thinking on Bloomberg back in 06, and I remember 06, 07, when around that time. And I remember watching the vids on Bloomberg or watching the TV show on what we call Foxtel cable here in Australia. And I remember thinking, this guy doesn't know what he's talking about. Little did I know, I'm sure his knowledge was much far superior to mine back then. So yeah, it's one of those things. Soy, excuse me. Tariffs cause major change to trade partners. Just look at soybeans. Absolutely, John. I wouldn't enter silver now. I enter because gold ratio was over 100. Now it's under 100. Fair enough. Absolutely. You've got a system there. Problem is everyone sees it. That is correct. Yes, that's fine. You saved me from the perma bears. No worries, Cody. That's good. Is small cap generally late cycle? Yes, it is, but it shows like extreme euphoria. So if we see quantum continuing to rally and we've got already PLTR at some exceptionally high levels, then that generally does lead into it. Notoriously, I look for healthcare late cycle, utilities as well. Because utilities is performing way better than healthcare this year, it's unlikely, statistically, that this is a year we get a recession crash. Okay, unlikely, actually, from the stats, and that's got a few stats behind it. I felt like I could squeeze up one more time on silver because of the major line. Been making so much cash on the rinse and the repeat. Fair enough. 07 Nadine. Make sure not to get that superhero syndrome that smokes all of us. US 30 rising again. We're watching it very much. Never chase. Absolutely never chase. My Doge trade took 7 years. The ultimate hodler. Well done. I'm glad that worked out. What about Tesla? We'll go through in a moment here. I like selling cash secure puts, certainly an option if you are cash secured, not if you're not cash secured. I'm in the most levered I've been in 3 years. Be careful. Everyone is. Here's the problem. Everybody is, according to the stats. So Bitcoin actually did something I think is really, really important. It smoked a head and shoulders pattern for the bears. Now, I didn't believe that this was probably going to be a bearish pattern. Of course, I like the idea of buying more at 95 from the idea of rallying long. But once I saw this and it started to rally up, I thought, oh yeah, that could be actually going to get a new high here. And now it's done it. If this sticks it, already it's looking quite positive. It's pointing towards a new all-time high. Chat, what do you guys think? Got over 2,200-ish people here. What do you guys think across both platforms? What do you think? Do you think it's going to go to 125 or even higher? If you see the train leaving the station, it's too late to board. Wait for the next one. Good. Thank you, Stephen. Crisp is looking juicy. Yeah, all the hyper growths. Crisp is, just so you know, Crisp is a biotech. So you got to be a bit careful about this. A notorious biotech that tends to run with like an RK kind of rally. And you can see here, it's been declining for a long time. It's had some good runs. It's had some really bad points. But yeah, when it goes, it can go like 20%. But yeah, you've got to be careful. What do you think of GRLVF? I've seen you post this a lot. GRLVF. What is this? I'm probably not going to know anything about this. Now, firstly, what is the size? It's too small, man. It's too small. Okay. My opinion doesn't matter. Neither does yours. It's fundamental only. 58 million. That is the small cap. Unfortunately, it's just not going to. You can't use TA on it. You can use basic psychology. That's about it. I don't even know what it is, but that's it. Kalana CEO says AI is going to wipe most US jobs. When we see a recession, it will force authorities to fix with universal basic income as we move to a circular style economy. This is possible, but I don't think it's that fast. It's going to take time. I mean, look, the low hanging fruit, if you're working call center, I think likely you're going to get wiped out ultimately. If you're working in maybe like a mortgage broking sector, that may get hit up a little bit. Insurance, obviously, those types of things, all sorts of things. I mean, you can ChatGPT literally what ChatGPT is going to take out. But never chase. 112K. Perma bulls are equally as dangerous as perma bears, not statistically. Perma bull will always be much better statistically. They'll kick your ass in terms of the perma bears. The perma bull will kick the ass of the perma bear over a long, long period. I agree, though, Chris. You do want to have thought process. The problem with perma bull is sometimes when it's really bullish and the euphoria is there, is people lever. And that's often the time you want to be most protected. $20 donation coming in from Aussie Cobber. Thank you very much, Aussie. You've always been a great supporter. $20. Tom, I want to thank you for everything you do. You've taught me so much. Appreciate it, man. I had a mini stroke last Friday. Dude, that is not good. And it really makes you think of what's important. Well, firstly, I'm sure everyone in the community, Aussie, for anyone that doesn't know, Aussie Cobber's been a community member here for years and years and years. Terrible to hear that happened to you. I hope you're recovering and they know how to help you and you can treat it and maybe make lifestyle change to whatever you need. But guys, I know that this is a male dominated community because obviously we're in stock. I don't know about you guys, but I'm just going to say here that this is happening way too much to people. And I'm seeing, like, I know somebody personally that's only 34. and they had a massive one. They're no good anymore. Like it really totally ruined their lives. And I'm seeing more and more of it of YouTubers that I watch. They're in their 30s and low 40s. So I think it's probably something to do with the food, the stress, I don't know, anxiety, who knows, the work culture that we're in. But Aussie, I'm sure I speak for everybody here. Thank you very much. Hope you're recovering. And I'm sure you're going to get a couple of nice messages in the chat. You're an absolute legend. So get well soon, bro. Yeah, it's something going on here. I'm telling you, when the people are sick, bro, it's a thing. No wonder. What are you eating? Yeah, I mean, people are. Maybe it's the cornstarch. All right, let's move over to the HSI here, and thank you again, Aussie, by the way. And this is the Chinese market. So we've got US 2K looks bullish for now. Again, because you've got that looking bullish, you've got Bitcoin looking bullish, you've got gold and silver looking bullish, well, at least silver. You've got US 500 at a resistance, sure. You're kind of building the evidence that generally still things are bullish. I mean, where is the bear? I don't see the bear. Do you see the bear, guys? Other than looking at the US 30-year and saying it's going up, I shared the high yields in terms of options and bonds. We're just not seeing the crack at this point. It could come like this, so you got to be ready. These are the most dangerous points when everyone's starting to really turn super bullish and lever up, but I just don't see it. Chinese market did have a nice bounce, new high, broke past this little rejection week of 24,000. I think it looks pretty good. There's quite a lot of liquidity going to China. I will eventually get the data out for that. I'm still hunting for the best bits. So yeah. Bond market will show you this later. Bond market will show it later this year. Yeah, I agree. I think it's probably going to happen a little while ago. Aussie Copper says, thanks, everyone. Absolutely, man. Why can't I see the stream? Refresh, bro, if you can. We all have plastic in our brains. True. Need to look that up. It's quite disturbing. Friend of mine had one at 40 2 weeks before the pandemic started. Yeah, it's terrible, bro. It's happening a lot. Health number one over wealth. Health is wealth, absolutely. Everyone waiting to score the bill. Bear is a sneaky predator. Yeah, the bear's just sitting there. It's hibernating for a long time, and it comes out and gets those fish. We're like the salmon. Okay, so let's have a look at gold here. 11:08 my time, PM, which means that we're about 22 minutes off the open. Thank you guys for joining us. So we've gone through so far. Let's just cover this. We've talked about hypergrowth coming back. We've used ARK-K versus SPY. Talked about the Russell 2000. Talked about silver at the start because, of course, it's quite important. Bitcoin just looks frankly bullish. I don't see the bear there at this stage. 6,000 is the most important for the S&P. We haven't done yields yet. We haven't done oil yet either, which is breaking out. Let's have a look at gold. Not as good as silver, there's no doubt. You come back down small time frames, no real support here. I'm not seeing anything particularly good. It's still making a series of higher highs and higher lows on the higher time frame, like a daily. So you got low, high, higher low, higher high. So it's still in an upward sequence, but there's, other than the daily 20, there's no real reason to be like, wow, I'm activating gold bulls or anything. No reason to panic, no reason to be necessarily super into it either. Now let's have a look at yields. We'll go to the 30Y first. Someone correctly mentioned it's starting to creep up there. Yeah, we're getting close to 5% again. And as we've talked about, and kind of correctly, every time it's gotten above 5 for too long and started pushing, we're seeing some intervention method, whether that's tariff on, tariff off, which seems to work. I don't know how that's working, but it is working. Or we're doing a US-China trade deal discussion, which obviously has been the story of this week and it's got the market up. I'm not so sure on that, but anyway, we'll see. And then, of course, we have, just any kind of potential Fed policy or anything that could come out. So clearly there's a worry somewhere around here. It's the Fed put or the Trump put or whatever we want to call it. Did Australia have a lot of wildfires last summer, Tom? That's a good question. I probably didn't pay enough attention. Look, we had a lot of flooding. We've got extreme flooding in Australia right now. We've got flooding in New South Wales all the time, flooding in Brisbane all the time. We obviously had that, for us, bad-looking cyclone for a place that doesn't often get it, which is the Gold Coast, and that almost got well, if that was worse, it would have been really bad. But look, we always have a lot of fires in Australia. There's always a lot of fires. The worst fires were a couple of years ago, though. Depends which state. Different states had some. I have a lot of clients in the 60s that are showing demand for 30 years at 5% coupon. Yeah, I'm sure there will be. What do you think of AMD? Got really high, 119, don't know. Yep, we'll go to AMD in a second. Let's just quickly go from yields, though. Yields are spiking up, and at the same time, we've seen a pretty good movement here in oil. I actually really liked this last week. I think we spoke about it in our Monday session. Actually, we didn't do Monday. Did we? No, we didn't do Monday with you guys. Did we? It was a public holiday last week. I can't remember. But I did talk about this in the private section. It was pretty strong. So basically, to me, there was a change down here. We got kind of like a steal. We started to see a rally past 61.70. First time I actually thought, wow, oil looks pretty good. And then, of course, daily did manage to close above these previous wick highs. So if we zoom this in, we've got doji. That's like kind of like neutral. Decision made, maybe. Barely up above. What do you guys think? I think this is more bullish than bearish at this stage. Could it be a false move? Sure. We do know that, of course, the weekly 20 has held the market down here. But you can make a case for all sorts of things in terms of patterns, double bottom, etc. Certainly looks a lot better. Josh says, end the Fed. I think the problem with ending the Fed is you'll end a lot of edge in markets, or at least you'll end some of my edge. The Fed has been quite predictable for a long time. We all know this, but there is even more predictability to it. And it's a certain level of certainty that makes the US market so amazing. It's kind of like, you just know they're pro stock, and generally the government's been pro stock. So the best stocks in the world were not only the most innovative, but they were also supported by, of course, the Fed and the US government. Now, if that ends, then you've got to ask yourself, there's a whole new wild world of trading that's going to come up. So it's like a floor kind of, as somebody says here. Now, look, I'm not saying you're wrong. I'm just interesting here. I heard they're bad for your lungs. What is this? It's become the health stream, guys. Well, yes, wildfires, any type of time that you have wildfires. I mean, you saw Caliwoods had terrible ones. People would have been breathing in like packs a day of cigarette equivalents in terms of those places there. Any ideas if the dollar is expected to gain some strength? As an investor from Europe, it hurts to see the Euro USD. Yes, that's right. International investors are struggling a little bit right now because the dollar, notoriously strong, has weakened. Look, it's at your last kind of point. If you go to the weekly, you can really see that. It's barely holding onto this support. This is actually a horror candle. So this is the really bad candle here for the dollar. And generally speaking, I would think that the dollar is going to weaken. But your key level to watch is this low here. At the moment, it's trying to do something on a small time frame. If I was saying more bullish, 100.5 plus will be quite strong for the dollar, at least small term. But I've said it all year. I continue to say it. It's my opinion the dollar will probably be in more decline over the longer term. So if you're looking at months into 6 months into a year, I still am bearish on the dollar. And most people are bullish. So I am bearish on the dollar. There are valid reasons. It tends to happen at this point in cyclical theory. And it's also, I think, wanted by Trump in many ways. And what he wants in some ways does happen. So yeah, it's a mixture of things. Have you read the Big Beautiful Bill yet? Lots of defense spending. I've had a look. I've had a brief look, and it's got all sorts of things in it. Big Beautiful Bill has more than I suspect in it. But I'm not American, so what do I know? To me, I just look at it and say, okay, what does that mean for us as investors and traders? And obviously, we haven't seen anything yet. So The yen is horrific. Well, the yen's been doing its own thing for a while. How much of the current bullishness is stocks is because of dollar weakness? Not that stocks are growing, just that it takes more dollars to buy the same amount of stock. Well, yeah, I mean, it's been often considered weak dollar, stronger stock market has been one of the synergies. I haven't seen that synergy for a long time. That was like the first thing that I learned, like was like dollar down, you buy stocks. And this was the general theory. I don't think it's really that. I feel like the bullishness at the moment is just that there's so much bullish animal spirit in the market and people just want to take lever. I've never seen more retail traders, more retail investors, more retail interest. I mean, you guys would know, more of you're probably all hardcore, but are more of your family members in trading and investing than ever before. When you catch up for a family breakfast or lunch or whatever, barbecue, are more people interested in trading and investing than ever before? Let me know. And I think you'll see the answer. Because retail did buy this dip more so than anybody else. COVID and the new tariffs increase inflation expectations, raise the neutral interest rate, giving the Fed more room to go under. They're terrified of the lower bound. Tariffs are what they need. Okay. Do people in Australia care what happens in American politics? Yes, a lot do. In more so than our own politics. Yeah. Because America's been a very important ally for Australia, especially defense. Obviously we have stuff, but you guys do have more juice. TM Knight says, "Hey mate, how you going? Very good." Gas says, "AMD now, man." All right, let's have a look. AMD now, man. All right, let's have a look here at AMD. We've got the buy area that I've often looked at as being a pretty big breakout, which is this 120.60. I actually really don't mind AMD down here. I think they're doing a few good things at the moment. They've got a couple of decent chips. NVIDIA's obviously given up or doesn't care about the graphics market and PC gaming. They just don't care. And look, I always say when they don't care, that always offers a bit of a brand change. And AMD, although it's not going to make most of its money off that, it does seem to be improving. And I like the level. I like the undercut. I like the break. Daily chart. Let's have a look. Yeah, it's just kind of floating around. Obviously, there are some overbought signals, but looking at a 120, 121. Is it really predictable at this point? What's that? The Fed or the US government? The US government is less predictable. What sources do you use to track leverage in the system? Also, what websites offer best information on dark pools? Do you have suggestions? I'd probably say like leverage is not that easy to track. Of course, Fred does have some things that the Federal Reserve uses, but it's it's a mixture. You have to use a lot of different websites. It's not really something you can do in just a few seconds. I am hoping to release or at least share with you more liquidity into the end of the year, because liquidity is going to be a big point here. Totally, I got all my friends interested in investing. Yeah, I wish they were interested in investing. Sigh, does happen, Lisa. I'm sure I'm actually surprised. I would have thought people that I never heard of ever wanting to invest and trade and do all these things are now doing it. AI IPOs when? Very much looking towards this. I want IPOs. AI IPOs, when they come in, to me, will be a very big sign of the end. But they're not here. People don't want to IPO. Most venture capitalists, and I believe, are looking to hold stocks back and hold companies back and try to IPO them as they get closer to S&P 500 size. Literally, they're just holding. We're just not seeing the IPOs anymore. People don't want to IPO into the mids or smalls, particularly. So many friends are preaching crypto. Interesting. They should just be preaching Bitcoin, shouldn't they? Eagle Juice is so tall. Everyone keeps telling me about the amazing bets and parlays they win on apps betting UFC and NBA. Yeah. What about their losses? It's like I spoke to someone the other day. He goes, "I won $35,000 on blackjack 2 weekends ago." I said, "Oh yeah." So how much did you give up? He's like, I won $35,000 on you. I said, how much did you lose? And he's like, you don't hear me. I won $35,000. I'm like, yeah, all right, dude. I'm sure he lost. Let's just say he still had a little bit of black eyes. So I'm not sure if he was he just kept telling me 35. He hadn't lost it all yet, that's for sure. Otherwise, you wouldn't have said he won anything. Did you saw that there's officially more users on betting apps than in investing? Sad news, in my opinion. I didn't, but yeah, wow. It makes perfect sense. Did you know that if you have a look, someone look up how much Australians lose on average per year, per person, per gambling person's age? You ever look at how much Australians lose on sports gambling? Tom, can you have a look at Elf Beauty? I want to buy the pullback. Yeah, we have a look at Elf here. We've got 9 minutes till the market opens. Elf Beauty was a favored stock last year. Got absolutely crunched. It's come back super hard. I'm going to buy it at a 95 pullback. I assume it's some kind of gap fill. Actually, it's a little bit gap fill's more like 90. Look, it's possible to get back. We did look at this last week. It's just basically on a vertical. To me, it's overbought. It's in close to supply. So it could go up a little bit more, maybe 130s, 120s, but yeah. My 80-year-old neighbor who can't use her phone asked me to help buy crypto. Never a good sign. Sorry about the 80-year-old crypto lady is sorry, I said lady, neighbor. It just reminds me of the story of a person I knew that was a lady, and she wanted crypto in the 2017 cycle, and it crashed 2 weeks later. Yeah. Cool, Eli. Yeah, we welcome you. Thank you very much. Please bring your American dollars to our Australian peso. I'm telling you, you're rich here. You just come in. I have American dollars, and you'll go out and you'll be like, this food, how much? And they'll be like, $4 American. It's amazing how much cheaper Australia is to eat out than America. You'd be surprised. And there's not much tipping culture here. Wished OpenAI would IPO. Yeah, in many ways, is this the leader? Do you guys think still, OpenAI? When you lose those bets, you end up with nothing. That's right. Have you looked into EU defense stocks, Tom? I just don't think they're worth chasing anymore. But yes, I've looked into them before. All I hear about is XRP. Yeah. XRP is the gateway drug for crypto bros. You often show an indicator that you use to evaluate a market top. Yeah, sometimes I do. Which ones? I use a few different ones. RSI. It's a mixture. You got RSI, stochastic. Oh, not stochastic, MACD. And bullish percent index is really good. Bullish percent index is very good. Sadly, in investing, I've seen whether Angel Reese will miss her first layup of a game. Yeah, you can bet on anything nowadays. Tom, do you like buy now, pay later stocks? I don't. But that being said, anything goes up or moves, that is always good. Tom, will we see a core weave pullback? I'd say the story has run its course. So core weave, which probably most of you are familiar with right now, is a stock that rallied all of the last kind of 2 weeks, 3 weeks, 4 weeks, whatever it is, and just keeps rallying. These are cool stocks if you get onto them early. Unfortunately, they don't really work for my type of system unless I'm trading momentum, because the problem is that can you replicate this trade? So to me, it's not that replicable. You obviously have to find kind of like that beautiful runner, and you can replicate holding into it. That's not a problem. But you can't really often replicate the runs and picking the runs themselves. A lot of people say they can, but I find that notoriously it's not true, because not that many do this kind of magic run. 19.8% down. Generally, that all means in holding pattern. When do the numbers come out? CPI is Wednesday. That's the big one. OpenAI has won the mainstream user base. That's how I see it as well. They kind of got the Google user base. I bet Google AI is used the most. Ultimately, maybe. McDonald's is allowing Affirm payments now. Yeah, this is mad. So you can go and buy now, pay later food. I just want to talk a couple of macro things here for a second. So here's the problem we have in debt. People bought all these cars in 2021-22. Most of them are underwater. As far as I know, Carvana approved almost every single kind of loan that was coming through at a point there. Again, these are car loans. Then we have buy now, pay later food. Please tell me no one here uses that, unless there's some weird coupon code to use it. No one here uses buy now, pay later for McDonald's burgers and Wendy's and stuff. By the way, guys, actually, that doesn't matter. Yeah, so all of that type of stuff is crazy. The real estate side in America, you can now buy, it looks like, properties with 0% downs again. And you have real estate suffering hard in, of course, many areas of Florida and Texas. Like over half a trill or something like that of real estate floating in terms of, and 500,000 less buyers than sellers. So you've got a lot of problems here in the debt markets. Just no one really cares yet. And that's the thing. The market doesn't care until it cares. Tom, Circle IPO was 31. Does it look like it might come but down at least to opening bid at around 70? The thing with IPOs is when they rally super hard, I wouldn't chase them, man. So if you're in it, cool. This is Circle, this one, Circle Internet. Oh, yeah, look at that. So it comes in IPOs at 31. Okay, bounces up hard. It's only a few days in. It's just absolutely rallying. This is notoriously bad. I mean, if you want to look at these types of things, I'm not saying it's guaranteed. Nothing's guaranteed. But if you go to look at history, Hood's great now. But if you go back and you look at a big IPO, they often run for a couple of days. Everyone jumps in. Like this notoriously was bought by quite a lot of big names. It's just bad, guys. It's bad when you do that. Facebook, Twitter originally, Hood, Snowflake. Just find any IPO and you'll see they all run in the US. Everyone, it's great time almost at the moment to IPO because there's all this exuberance. But yeah, I don't chase those things. Quilal, thank you very much. $5. Could you have a look at Wise Tech Global WTC? Sure. What do you think about recent merger with American companies? I don't know about the recent merger. So unfortunately, I'm not that familiar with the merger news. I'd have to look here. So this is obviously Australian tech stock, but I don't know the news on it. Yeah, I don't know. I know a lot of stocks. I don't really know what's going on with this one. It's not one I track. So I can't answer the question, Quill. Maybe somebody in the chat can. I'm not going to say I know that. In terms of price action, I'd say it's just making a series of high highs, high lows. Obviously, you got gap fill. Got really nothing here at 105. So it doesn't really look bearish, nor does it look super bullish. It's just in an upward trend. So yeah, maybe someone else can answer it too. But Cash Secure put some core weave because Ivy is nuts. Yeah, the IV is crazy. Circle is up big. It's up massive. It's time for me to buy a new car. Perfect timing. The industry is slowing very quickly. Correct. A lot of stock. I heard there's almost a year of stock in the US, but that may have lessened recently because of the tariff stuff. Buy now, pay later isn't nearly the same as credit cards. Yeah, because it takes it out of your account. But have a look how many bad debts there are. I'm sure there's quite a few. I use Afterpay to avoid card payment fees at some merchants. Okay. America's just one big cash advance corner store now. America relies on capitalism. It's a big component, it's a third of the economy. 30 seconds still open? Yeah, I think we just opened. All right, guys, let's have a look here. So the story is 6,000. The close above this is the key for today for the US 500. Bitcoin looks pretty strong this morning. New high is strong. Daily close is going to be a big deal. Russell 2000 and small caps are where the money's at this stage. It does look like oil kind of looks pretty strong. Silver continuing to do well. That's good for us, of course, if you are doing well with silver. Big stocks today, NVDA 1.47, so semis continuing to flow up. Interestingly, as we mentioned before, retail not being a big semi buyer in comparison to the others. There's no real reason to say NVIDIA is going down at this stage. It's continuing up. So I do have some signals that say, man, be careful here. I wouldn't probably buy a new position, but still it's a series of higher highs and higher lows. What is this? It's a new logo for Amazon here. Is it new? Is it a new color or something? I don't remember it being orange. Maybe I'm blind. AMD up 3.29. That's pretty strong. Intel up 2.52, still at these lows. The bargain basement Intel at the bargain basement area. Is it worth it? Small caps seem to be doing pretty good. Let's have a look at an RK here on the load. Yeah, so it's holding 1.28%. We'll quickly look at Tesla because a lot of people will want to look at that this week. I think with Tesla, it's pretty clear to me that Elon has backed down pretty hard. And I think he kind of had to have a discussion with a few people. So 280 down 4. So we're back at the put wall. It is a pretty key level, is 270, 280, 275, 280 in particular. This is where all the options lie. A lot of puts here at this level. I would say that the general trend that I'm seeing is that most people believe that Tesla is no longer investable. And this is people that, my peers probably and other people. Now, I know that the best Tesla investors that I knew of, they dumped Tesla about a year and a half ago. Okay, they got out, they were done whenever it was near their pretty good prices. Like they were dumping, where were they dumping? Yeah, they were mostly dumping in here and even in 21, 22, actually. So why does that matter? Well, they were already out. They moved on to other things. Particularly they like PLTR, been pretty good. So the next level, the problem with Tesla is it's lost a lot of faith from a lot of pretty keen people in Tesla. What do you guys think in the chat? Have you lost faith in Tesla over the last 2-3 weeks, maybe a couple of months, or are you still really ultra bullish? And I know this is polarizing. Some people are going to totally disagree with me, but most people, they see it as a risk now that they're not going to get government contracts, and that potentially, if Elon does keep pushing the envelope, that obviously that can do irreparable harm to it. So that's the problem. People are actually saying reduce, reduce, reduce. Often I always say whenever there's fear, you've got to say, is that justified? And I think it's probably one of those ones where you want to look at the options more. And 280, 275 is a pretty strong base. Be interesting to see how it plays today. And I'm sure there's going to be, I'm still going to keep covering it because I think there's going to be replication. I don't care whether it's up, down, all around, frankly. If there's a very good trade, it's a very good trade. Because the thing about Tesla, bang, it moves like 10%. So it's still a great options trade. Yeah. Okay, Joseph says here, let's read some chat here. Joseph says, I'm still a believer in Elon and Tesla. Cool. Tesla risk reward seems more risky now. Okay. Kathy says Tesla would to 2,600. Yeah, Kathy was on that. I haven't watched it. I think it was like Diaries of a Millionaire or something. I don't know, that guy. And I saw a picture coming up and I was like, what the? Kathy Wood's on that show now? Remember Tom's 145 Tesla call a couple of years ago? Yeah, but that happened. Just took a while. See? Look at this. Okay. Yeah, look. Boom. See, D-striped, it happened, man. Just took a little while, Core Equity Report says, dude, you're absolutely right about Tesla. I have not looked at it for 6 months now because you cannot predict anything on it. You can do only options and flow. It's the big thing here. Okay, market's falling a little bit here. Bitcoin resilient, silver resilient. Bullish long term. Okay, Anthony, just sold it. I don't care that I lost money. I was driving me crazy. Yeah, that's another thing. The stress of the tweets, the stress of what do we call them now? They're tweets still? Are they X's. I actually I'm on the platform. We have a decent following. Thank you guys, but I don't even know what it's called anymore. I'm a long-term perma bull. Tesla is grossly overvalued company that has fierce competition. I'm certainly there. And NVDA breakout. NVDA. NVIDIA is doing well, and it looks like it's hopefully going to go to 147, then hopefully break that. Yeah, this one was pretty wild. I lost faith in Tesla when Elon pretended he was good at gaming. That is so funny. I don't understand why anyone thought he played games. I knew he didn't play. I knew it. I knew it in my heart. As soon as I heard he said that he had that D4 account, Diablo 4, for anyone that doesn't know, I just knew it was BS. He's like, I'm the best in the world. I'm thinking there's no way that you are on the leaderboards of D4 properly. No way. I'm assuming that was, and then he calls, what did he say? It was like Nelon Ma or something was playing his account. My goodness, that was wild. D-Stripe says, I know I was with you. Yeah, I remember, man. Diary of a CEO, Diary of a Millionaire is what I said. I still saw Kathy Wood. She came up. Tom, a few months ago, you said you were not taking new long-term positions. That's correct, other than metals. Anymore, is that still the case, or are you more bullish medium term? Not really. I mean, when I say long-term, I'm talking years. You know, I'm just not. I can't be bullish right now on the years. Look, there are times to buy the dip, and there's no doubt that, you know, one of the best reads ever is the percentage of stock under the 200 moving average. When it gets brutal, you have to look at the market and start saying, is this a super buy level? Good tip for you guys, by the way, out there. Give it a thumbs up if you like that one. Percentage of stocks below the 200. It's a very easy one. No one said it had to be that complicated. But that, along with every other, kind of big read, is always key. But yes, that's exactly what I said. I said a few months ago, so this is back in Feb, I said that I was no longer taking long-term positions. Yeah, at this stage, that's correct. And you could call me a mad person for that. I just don't feel... I just can't get over a few things. It's not the tariffs so much. It was before the tariffs. It's the margin. I'm very worried about the way that the world is treating leverage. Very worried. Are you guys worried? And I haven't been worried about that for a long time. Well, actually, ever. But I've seen in history that when margin gets high and everyone thinks, and look, I always listen to the taxi drivers. I took a taxi about a week ago. I spoke to the person. I said, hey. He said, don't worry, man. I said, oh, yeah. I said, what are you thinking about the market? And this was not stock, because in Australia, people half like stock, half like property. Anyway, still my property. He said, don't worry, man. He goes, you pay $2,000 to $3,000 and you get $1 million. And what he's talking about there is he's talking about buying lender insurance. And basically, this random taxi driver, he wants to take like a $1 to $2 million loan. And I'm thinking, okay. And I'm not doubting you can't get it. You know, the banks are lending, but I don't know. I find that quite disturbing. Don't worry, man. He doesn't know much. I'm telling you. I quizzed him a little bit. I know what I know, and I know what you guys know. He didn't know. So that was big fun. Did that Diablo 4 stuff got debunked? Yeah. What, the fact that he was playing Tom talking to taxi drivers is about as true as Elon being a gamer. What do you mean? I do talk to taxi drivers about this stuff. Edward says, been worried for 2+ years, but obviously too soon. Timing's everything, man. True. Fair enough. Yeah, worried of missing the train. More leverage. Yeah. Yeah, I'm just chilling. Like, you know, I think for now, it's all about, comparable. What are you doing? So, you know, gold's done very nicely. Silver's done very nicely. It's continuing to do well. Bitcoin's done very nicely. Alts have been okay. But yeah, the word, look, there's a difference in opinion. Like, it's always better to be optimist. Always, 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 always. Like, don't be a pessimistic person. No one likes you if you're nasty bear person all day, and you rock up to the party and you say, everything's going to blow up. No, I know no one likes that, yeah. But when you're talking about markets, it's a big deal here. I just think this credit is getting wild. Years ago, you highlighted the number of stocks under the 200 moving average, and I long-term buy and sell those levels you highlighted, and it's paid dividends to me. Yeah, don't change what isn't broken, man. I'm worried because people buying crypto on zero interest rate credit cards. That's the thing. Bears, you just buy metals. Yeah, so metals are a pseudo for this type of thing. So what that means is you get kind of a lot of growth in this type of period while you're not necessarily as exposed to maybe some things that you feel are expensive. Tesla cars do not look good and the interior is bad. I've owned 2 Teslas. I think they look all right and the interiors were minimalistic. Others are and will make better cars. I definitely think that others are catching up big time. The features you get on some of these Chinese cars are wild. I don't even know what tech they've got in them anymore. It's like everything's standard. Like you go and buy a GWM, which is Great Wall Motors or something. I don't know if you guys in America know this company. And they have this thing called the tank, which I think is funny. That's what they call it. It's a GWM tank. And you sit in it and you're like, whatever. It's all right. But the thing is, it does have everything. And there's like one spec. And it's just like you get everything. Whereas you go in and you go to the Japanese or the German manufacturer and they're like, would you like the XXL version? And this one comes with heads-up display and a heated steering wheel. That'll be $7,000. Tom, how would you describe your trading these days? Day trading with zero DTE options, swing, or something else? Position-based investing, which basically that's my main favorite. But zero DTEs do offer extremely good edge sometimes. So yeah, position-based investing, and that's flow investing based on many of the things we talk about in the daily show. I'm not kidding about dark pools. I pay a lot of attention to them. I'm not kidding about when we look at the zero DTE options. I use that to make position-based investments, or trades is what you would call them, so they can last a few days into weeks, into months. But yeah, I really love flow. I think it's the key. I think it's the key for the future. Follow the flow, follow the liquidity, don't care about anything else. TA activates those things. So technical analysis is the activation of your data and your movement on the market. So it's super key. And then you don't have to worry about AI for at least quite a while. If you want to find out more about that type of stuff, I have it in my advanced course. They won't let us have them, Tom. The Chinese cars, yeah. Oh man, I think they'd wreak a bit of havoc in America. I think a lot of Americans wouldn't like them, but when they come in, then they sit in one, they'd be like, what the? I get all of the features, whereas Ford over there is like, hey dude, you want these 18-inch rims? You want these 22-inch rims? What do you mean by flows, Tom? All sorts of things. So it's a mixture of options flow. It's a mixture of large transactions coming through or dark pools that we talk about. It's a mixture of actually, the way that the market is presenting a storyline. So that's actually a representation of the charts. Because remember, charts is the psychology of the market. So you have to think and put yourself into the beginner you. What did you used to do wrong? If the market stole from the beginner you, it's probably pretty good trade or investment or whatever. HamFam says, hey, Tom, long time fan here. Appreciate it. How do you feel about the aerospace stocks such as LMT and GE, which have been on a tear with all the global tensions? Yeah, look, I think if it's in a trend up, then you've got to say, well, it's pretty good. So, the trend up is the trend up. Do I think that that's an exceptional trend? Of course. If you've been on this, rally. Hard to pick exactly where it ends. Traditionally, I'm looking for incredibly large, consistently large, ridiculous candles. But you can even see when this stock has gone bad after big epic runs. So if we go back to history, it tends to consolidate. And I think that should give you, it's not going to guarantee to do that, but if you're on an epic run and you've tended to consolidate first, then that can help you to say, okay, well, if that's what it tends to do, then what would make it any time? What would make it different this time? And this is the thing I love about the left-hand side of the charts. As you're seeing the market go up, and then it consistently does that kind of thing that we just saw this stock tend to do, then we can say, well, even if we don't know where the top is, because I don't know where the top is, could be $350. Who knows? Could be. It's generally going to consolidate up there more. And I think that's key. I saw Kathy Wood's interview thumbnail and laughed my ass off. I've got to be real. I saw it as well. I didn't click it. I know what's in there. It'll be Kathy Wood, and she absolutely, totally, shredded in 2020 and 2021 in terms of getting the most amount of money I've seen in a while into a fund. But I know she's going to be talking about innovation in the US, that this is the next 5 or 10 years is the biggest thing ever. And, we all know. And that's fine. It might work. Ham Pam says, thank you, sir, you're the GOAT. No, just somebody that's put a lot of hours in and love this stuff. Hi, Tom. Why won't yields in the long term cool, even though the data is weakening? It's a mixture of stuff. It's a lot of things going on there. The data it's weakening, because we obviously saw that in the jobs numbers. Probably a story for one of the videos, which I'll cover. But the jobs numbers are weakening. The market itself actually has a bit of strength in it. The AI boom is adding GDP as well, real gains to the US economy. So it's also a mixture of geopolitical stuff as well, including the yen. Didn't she lose her butt on Tesla and wants to pump it back up? Kathy Wood lost on NVDA mostly in terms she took profit too early. She was super right on that one, but yeah, unfortunately took it early. People are out of their minds with these quantum stocks. It's years away from any practical use. This is from Jay. And even then, we've got experts in the field here in quantum, and most people have messaged me and said we're not ready. And they have working machines. It doesn't have that many uses. It's just a massive bubble. To me, the quantum is a sign, again, of a market that's getting carried away. I tend to agree with you, but as a trader, as a flow, somebody that might be looking for flow and profit, there's no reason you can't look at quantum. But you've got to be aware of what it is. It is likely a bubble at this stage. I watched some because it's hilarious. She called 2,600 on Tesla, and according to her, that's not including robots, only robo-taxi. I can't get behind that. In China is data mining the rubbish out of their own population. They have tons of EVs. The EV pickup is huge. They're going to get the data. And obviously then you've got whatever it is, the Google one. I think the Tesla thing is like the OG call. I'm sure she's got some other stuff. Somebody says here, Archer Aviation. Sure. We're just coiling the market for an explosive move. Mm-hmm. I think what's happening to Waymo in LA right now, the robo taxis are kind of in danger. Okay. Have you had a look at the US 2000? We did look at the US 2000. And we liked the break, but we do know that retail foreshadowed the break, which is a bit weird. So today, I think it's all about 6,000. The S&P is probably the key level. Your voice sounds hella different live. When you say that, it'll sound different on different mics. So different microphones are going to sound very different. We usually have a different mic. All right, guys, that will bring us to the end. Copper is up as well. Oil, certainly one to watch here. Silver, I'll give it a thumbs up. And the rest, obviously, doing well. Thank you so much for watching. I hope you enjoyed this week. We did cover some good stuff. Next week, I'm looking forward to bringing a bit of quantum so we can talk about these crazy rallies. But at the moment, you probably do want to go back into, considering your stocks, considering which ones We do know that at the moment, the money seems to be flowing into metals and seems to be flowing specifically into hypergrowth. Holding hypergrowth has been notoriously hard in the US because it's often that last one that picks up. And today seems to be mixed across the board. So what you want to be looking for always, and I'll show you this just here for the end, you always want to be looking at your sectors and seeing what's leading in the morning. You always do that straight away if you're wanting to see what you should be following. And you can see here today is mostly still a risk on day. We've got utilities, staples, and healthcare making up the bottom four. Three of those, of course, are defensive. And XLK is up, XLC is up, and it is kind of more on growth. And of course, if you have a look here, you can see you can chuck in some, other kind of areas, whatever area you want. We'll put in semis as well. And you can see here semis and metals are the two top. So that's no surprise. And I'm sure if you added in hypergrowths, it would be up there as well. So that's pretty much what we said in the morning. They did open up big. It was kind of foreshadowed by Friday. And we're not seeing a financial market collapse. At least the financials aren't collapsing at this stage. I am watching both of them for us. So it'll be awesome. Very good. Sponsored by American Standard and Toto. Hey, I do have it. I have a Toto. I like Toto. I'm not sponsored by them, but Toto, if you're out there, I will take sponsorship for Toto. Okay. I've got to say, the thing that made me want to buy, and I did end up buying Toto, was that South Park episode. It was so funny. I do love the South Park episode. It's hilarious. South Park is way too relevant, guys. The toilet paper industry being like a cartel, trying to kill anyone that has a bidet. Too funny. All right, guys. Maybe it's partially true. That's the issue. Someone tell Tom how sponsorships work. I'm not being capitalistic enough, yeah. All good, everyone. I don't think doing Toto sponsorships on this channel would be a really great idea, yeah. Thank you very much, everyone. You have a fantastic week. We'll see you at the end of the day, and obviously we'll bring you some updates on what we're thinking. Let's go silver. Let's kind of go crypto as well. I'd like to see Bitcoin go, and let's see if this Russell is another one of those evil fake outs from the Russell that it loves doing. Thanks from New York City. No worries, Java. Appreciate it. Thank you, everybody. We'll see you in the next one. Bye for now. Catch you.